So options have actually launched on SoFi's platform, or partially really, but we'll talk about that in this video along with 7 other things that I wanted to speak about that maybe weren't as large to actually speak about on a single video, but in this video we're just going to be talking about 7 different pieces of SoFi and Galileo's business that maybe needed to be covered, and we can do that all in this one conglomerate of video. But let's start with options, which was rolled out yesterday, okay? And now if you don't have it on your platform, don't worry, it's going to be fully rolled out within the next 2 weeks to all of their members. But now if you're actually wanting like covered calls or cash secured puts, well, we don't actually have that right now, and that's coming later, which by the rumors from what I'm hearing should be coming in January. So hopefully the same rumors that said it was going to come out in the end of November are the same people that are telling me that it's actually going to come out in January. So hopefully that actually comes true, but it is a rumor like always. As for the benefits of what this can do for SoFi stock and not just the platform, well, obviously there's the known benefit of just transaction-based revenues, but this could be quite small, right? It's just a portion of our smallest segment that we have in our business. But what I find is more interesting is the total usage of our platform whenever customers might be using another financial services product. For example, if people are interested in calls and puts, but right now they're actually doing that on Robinhood's platform, but yet they use all their other financial service products on, SoFi, for example, well, this gives them a reason to not have a brokerage account at Robinhood, and they can transfer over that money over to SoFi. So not only does this mean that there could be an option for new assets under management to be held under SoFi's name, but also the usage of how many hours or how many sessions that people actually open up with SoFi throughout the week. This leads to a higher opportunity that maybe one of those clients we were able to cross-sell because we get the right timed and right price loans out to them, and then we can actually start making the money on the real products that we like to sell. Another thing that I wanted to talk about was Anthony Noto's comments that he made at the FinTech conference hosted by Citigroup. He talks about a new product called SoFi Travel and quoted, "We'll have the ability to white label for you through our brand, SoFi Travel. The ability to travel at discounted prices. And not just buy in our app Better Travel, but also use your reward points on top of the discounts that you already have. And build more reward points if you use your SoFi products to buy it." This is what I find is so cool because obviously SoFi is really trying to be an innovative company, and SoFi is just branded to be this company that wants to be a one-stop shop. And now it's starting to get to a point where we start to have all of those products already. So what can they start to do? Well, they can start to brand out into other branches or other areas where they might be able to capitalize as well. This is what I think is so cool, is the idea that, one, we want it to be a one-stop shop out there and create all the financial services products that you could possibly need, okay? But now that we're actually starting to approach that and starting to get all the actual processes that you might need in your day-to-day, financial service life, well then what they're trying to do now is actually create innovative products that maybe you might need and that it might not actually fall under that exact category. We can start to innovate on other different segments, right? And this is another thing that he's quoted in saying, 2023 will be a year where we start to plant these seeds that go beyond just simple financial products into these verbs that we're talking about, spending and investing in a much bigger and differentiated way. That is so exciting because they're already building best-in-breed products. We saw it on the SoFi Options product that just released with, no commissions and no contract fees, which is exactly what I said was going to happen. But now they're able to set their sights on other things that might even get newer customers in different segments. So cool. Can't wait to see how that pans out. And by the way, this is definitely paving the way for a travel credit card as well. A big product that people have been suggesting that they want from SoFi. It's always common with different credit card providers. And now that we're getting into the travel segment, it's definitely going to come with the turf that we actually get a more premium credit card for people that choose different lifestyles. Next, I want to talk about Galileo's newest client, Pomelo. Unlike, T. Rowe Price or H&R Block that is just simply going after markets that have already been made, Pomelo is actually creating a brand new market, a world-first product. They're trying to go after credit charge cards that are also allowing for remittances. So not only will you be able to money transfer back from the United States all the way back to Philippines, Mexico, and India, and they'll be expanding into other countries, right? But also allowing you to build credit history if you're new here into the United States. I mean, I'm from Canada, but I get so intertwined talking about SoFi, it feels like I'm part of this country. I'm not. And speaking of new things that are happening with Galileo, they're also trying to create new products to get us into new markets. For example, fleet cards. For businesses that deploy and operate a large fleet of vehicles, whether that's specialty purpose vehicles or drivers or even special vehicle IDs, right? What they're able to do is with these cards, they track everything and allow a management system to host and actually organize all of that data for you instead of just everyone having all their individual cards and giving receipts and all, old school small business things. As you start to scale, you're going to need better processes than that. So having a single issuer to manage all of these cards in one will allow for a really streamlined access to all of this data and hopefully be able to lower the expenses for the business or our clientele. And it's pretty intricate. Like you can actually choose not only for the cards to be managed by the people individually, but also by the vehicle IDs. So it doesn't matter who's driving them. All the charges will be charged to the vehicle ID. So then you know who was working at that time and yada, yada, yada. But all it is the same thing as our other clients, but just in a different industry, right? It's payment processing and payment data all into one management system for, sort sort of a new clientele that maybe we can go after. But that isn't the only thing that they've also worked on that I've gotten really excited about. There's also direct deposit switch. This is a big pain point for a lot of fintechs that are out there that are trying to gain access to these new clientele. The funniest thing is that most of these clientele are actually with a small amount of actual employers. But what's funny about these large employers is that they're actually working with Galileo to allow these switches to happen through an online portal. Direct deposit switch is like an error check, okay? They're just making sure that all the numbers are correct and where you want to be is the numbers that you're actually putting, right? And the actual method of how good this is versus the conventional methods is about a 50% increase in the clients actually doing a direct deposit versus conventional methods. That's amazing, right? Whenever we're going to talk to other fintechs that might not have this, service or with their, payment processor that they have now, they're going to want to switch to Galileo because we can maybe up their amount of revenue or expected revenue because we have this amazing new technology that just hasn't been widespread just yet. Next, I wanted to go back and talk about SoFi actually purchasing and selling loans, because an article came out today that actually spoke about Lending Club repurchasing $1 billion of a loan portfolio that they had originally sold to a bank. But interestingly enough, as I was listening to Chris Lapointe actually speak yesterday, they also purchased about $1.3 billion worth of loans back, which does increase our loans on the balance sheet, but however, it also increases our net interest income from the loans actually, paying us back all that interest on top of the principal. Once again, once I dove deeper into SoFi's loan business that they repurchased, the $1.3 billion, they had also originally sold that book out to, different prospective buyers that might want that, fixed income product, but then we repurchased it back whenever we thought it was safer and that we could afford it. Very interesting, but I do want to say, this does increase our risk if something like maybe a mass job layoff and people actually default on their loans. SoFi will be potentially get hit harder in this market, but if it does actually work out and, the default rates don't actually climb as much as, what we're expecting, then that means that this will be the fastest route to profitability that we could ever assume is net interest incomes that are actually climbing. Now, if SoFi was to do this on their own without any other competitors jumping on this ship, it might be seeming a little bit more risky, but the thing that I really like is the fact that Lending Club is also doing the same thing and at about the exact same size, right? 1 billion to 1.3 billion. So there must be some data that they are seeing where they think that this is a very safe move to make. Obviously, Lending Club is already profitable, so they don't even need this to survive or, to help with dilution or anything along these lines. So they must just be seeing an opportunity where they can get an advantage over the other competitors, and they're doing that by buying $1 million back of their own loans. I'm going to be making a full video of the risks that we hold on our balance sheet, but until that comes out, that'll be coming out soon. But until then, I just want to talk about SoFi's catalysts that we have, into the future. First of all, I'm not going to talk about stock price. I've got no way to anticipate the actual macro environment, and I'm not going to do that. What I am going to do is try to anticipate the actual fundamentals of the business. And considering that stock price follows the fundamentals, I think it's a good way to sort of do that as well, right? If we focus on how good the company is doing, the stock may follow. In the latest technology conference that Credit Suisse put on for our CFO, Chris Lapointe, he had a lot of great things to say, but one thing really stuck out. Right now, we're in discussions with large financial institutions and other consumer businesses and platforms that we never were in before. And that's a function of having this complete end-to-end solution. The idea that they're in these talks is so important because I just want to put it into perspective of what a catalyst even is, right? Look at Affirm, for example. Affirm, some of their biggest catalysts were not new products, they were new customers, like Peloton, for example, or Amazon. These were some of the biggest catalysts that the stock has seen because a single customer can change their entire business. A single top 10 financial institution, any one of them, for them to actually join onto our platform would double our Galileo business overall. Whenever we consider that all of the customers that we have make up for a total market cap of 150 billion, Bank of America or a Wells Fargo doubles this, right? And that's simply through our Galileo APIs. That's not even including the amount of money that we might get through servicing through Technesis. So I say it again, if there's a bunch of new businesses that are looking for what we have to offer, we are a world's first solution to actually offer all three of these different solutions of offering the payment processing, the actual core technology, and then possibly the bank sponsoring as well. Obviously, the big financial institutions don't need that, but some of the smaller customers will. Then that's super important. What they don't have access to is the cloud native technology that will also make their business, faster, safer, and more reliable. And that's really what we have to offer. So I say it again, it's not about products, it's about the customers that we're achieving, how fast we're getting them, and then the margins that we're actually getting on those customers. And speaking of margins, by the way, Chris Lapointe talking at that Credit Suisse conference was actually very important about this. He starts talking about the technology platform. Now, this is super important because this is actually contrary to what I was believing, a couple videos ago where I was talking about how our take rate might be slimming, and that's why we're seeing less revenue on our tech platform. Well, this is not what he has to say. Listen to this. Our tech business right now, we're operating at a 30% contribution margin. We expect that business longer term to operate at north of 40%. That is so important for two reasons. One is because the actual contribution margin that we have for Galileo was much higher than what we actually bought it for Technesis, right? Technesis actually made in the mid-teens is what they said as a margin for whenever we purchased the company. Now, what they're implying here is that not only are they going to be able to actually bring Technisys's contribution margin up to where Galileo's is, but them together is actually going to make it 33% better. So if we can continue to grow the amount of clients that we have, B2B or B2C clients, right? And then the amount of accounts that they open through their businesses actually go through Galileo and Technisys. So that includes the, that improves the amount of customers that we're dealing with, but then also our margins grow by 33%. This is a snowball that's getting, crazy large, and that this is not even our biggest business right now. And we're still growing on SoFi's platform using the same technology that we're selling out to our other clients. It's very, very exciting, but not as exciting as you guys hitting the like button and subscribing down below if you want to see more financial content just like this.